If you want to make a monthly income for yourself, let it be 10,000 rupees per month, 50,000 rupees per month, or even 1 lakh rupees per month, especially for your withdrawal, then yes, it is possible through mutual funds. And the feature that we're going to learn about here today is SWP or Systematic Withdrawal Plan inside mutual funds. We are going to break a lot of myths, give you the exact reality of how your retirement planning should be, and we are going to use a proper mathematical approach so that you can plan your life and your SWPs properly. Let's start with setting the agenda for this video. First, we'll look into what exactly is an SWP or a systematic withdrawal plan. We'll look into how it works, what is the math behind it, and what is the logic behind it. In this method, you can see that even when you're withdrawing money every single month, your investment or your corpus still keeps on growing, and it is a very crucial tool for your retirement planning. And then we'll look into how to make a systematic withdrawal plan for yourself, customizing it to your needs and requirements. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to marketfeed. So before we discuss what an SWP is, hope you already know what an SIP is. SIP is a systematic investment plan. Most of you would already be knowing about it, or you would have already started it. It is a system or a practice where you keep a fixed monthly amount as an investment into any asset, mostly into mutual funds, so that you can build a corpus for a later goal. Here, money goes from your bank account every single month into a corpus account. Now, SWP is the proper opposite of that. That means you have to build a corpus, and every single month you can withdraw money into your bank account from that corpus, and hopefully also keep growing that corpus so that you never run out of money. Yes, one thing needs to be very clear here. The money comes from some sort of corpus that you have made for yourself. It does not come from thin air, right? The 10,000 rupees per month or the 50,000 or even 1 lakh rupees per month that we talked about does not come from thin air. It comes from certain investments, intelligent investments that you're making. And this SWP will hit your bank account so that you can continue to live your life comfortably even after retirement. So now that you understand really well what an SWP is, let's look at the calculation behind it, and I want to do that with a real practical example. So let's get started. Here in this practical example, we are going to do an SWP on Nifty 50. Not taking any fancy assumptions, I am taking real numbers here to show you how it works. So here you can see Nifty 50's real return in the last 3.5 years. So from 2023 till 2026, as we talk today, this is the monthly returns that Nifty 50 has given us. Real numbers, even with the recent monthly falls, right? So January, you can see that 2023 Nifty fell by 2.5%, then fell by another 2%. Then it had multiple months of green. Then even when you're looking into the latest 2026 number, you can still see it is nearly 3.16% in the red. So you understand the real data that we're going to feed into the system, Nifty's real return over the last 3 years. Now here we're going to assume that we have made a lump sum investment or a lump sum amount of 50 lakhs into Nifty at the beginning of 2023. Right? And here you can see if we take an NAV assumption, that means let's say we are buying a mutual fund and the net asset value, one single value of that mutual fund was 100, we would have gotten nearly 50,000 units. That is correct. I hope you understand. Now we can calculate here what would have happened to our corpus every single month with Nifty's volatility that we are seeing here. Right? What if it fell by 2.45% in a month? What would have happened to the NAV, and what would have happened to our withdrawal also? We're going to show you with simple examples here. So you can see every month in 2023, as the number above keeps moving, Nifty went into red, then went back into green, everything happened. Still, this is the net asset value that we're going to get. Okay, and you can see that it's slowly but surely it's going on to increase and increase over the entire year. And here I'm going to calculate an SWP amount of 20,000 rupees. Let's just get started with that. So if you're investing 50 lakhs and if you're withdrawing 20,000 rupees per year, this is a calculation. In 2023 January itself, we are going to sell 205 units of whatever index mutual fund that we're buying. And in February, again, we're going to sell 209 units. March, we are again selling, and we're going to keep on selling so that we get our SWP amount of 20,000 rupees per month. Okay, the calculation is very clear here. We made a lump sum investment into Nifty. It went through a lot of volatility, the real data here, and despite the volatility, everything happened and we kept on selling so that we'll get our monthly income. And even at the end of it, you can see the metrics here. Total units sold 6,065. Units left out of the 50,000 that we invested in, there is nearly 43,930 units left. And that value, the value of that current investment is 63 lakh to 22,223. Okay, now let's start increasing. 20,000 is not enough. So let's increase the amount. 30,000 rupees per month. Again, the value, current value of your investment, even after withdrawing a lot, comes up to nearly 58 lakhs. You can keep increasing this amount and you can see the magic continuing to keep on happening. So 40,000 rupees per month withdrawal, still you're going to have a value, current value of more than what you invested in. 50,000 rupees per month. So you can see that even after withdrawing total 18.5 lakhs over the 3 years, still the current value of your corpus that you had invested in, it's still higher than what you had put in. So that is a magic or the power of SWP. And here these are real numbers and it is taken for a very short time frame. It is taken only for 3 years. Now imagine in a longer time frame when Nifty is given more time to grow and perform the way it usually does. Imagine what these numbers would be. Now let's start making it more practical. Let's get into the next section, which is making a detailed plan for you to have a SWP or a systematic withdrawal plan for yourself. So let's get into that. So here when you're making the plan, what I would personally suggest is for you to go with a bottoms up approach. So what are we going to do here? So the step one is to try and find out what you should be withdrawing every single month after you retire or when you want to start withdrawing your money. So there are certain calculations. So here you need to understand what your expenses would be at the time of your retirement or when you want to start your SWP. So that's what we're going to figure out here. So let's say the value of your current expenses is what you want to withdraw some years later. You don't know how many years later and how much value. So let's do the math here. So let's say in today's value, you want to keep withdrawing 50,000 rupees per month every single month. And what is the annual inflation rate? Currently in India, it is somewhere around 6%, 5 to 6%. And let's say you want to start your SWP or your withdrawal after 25 years. So here you can see that the future cost is 2.15 lakhs. That means if you want to withdraw what is the 50,000 rupees equivalent this year, after 25 years, you should be planning for a withdrawal of 2.15 lakhs. After inflation, the value of money keeps on going down. So today's 50,000 becomes 25 years later 2.15 lakhs. So now we understood just the first step, which is what is a monthly amount that you require to sustain the lifestyle of 50,000 rupees per month after 25 years, accounting for inflation. Now, few real things here. I know most of you would want a much better lifestyle, not a 50,000 rupees per month lifestyle, especially when you're going to become rich and enjoy your life. So you can come ahead. I'll give all of these links in the description down below. You can come here and enter the right values that you want for yourself. If it is 1 lakh rupees per month, you can enter it here. You can see that the future cost of 1 lakh is going to be 4.3 lakhs by the time you retire. And based on that, all the calculations you need to change back and update. But here let's give 50,000 rupees per month for the sake of this calculation. So now that we understood step 1, the step 2 should be how much withdrawal corpus do you need to build so that you can comfortably keep withdrawing this 2.15 lakhs. The question is very simple. Here I would want to highlight to you the 4% rule, which is very popular in the US. It says that if you have any amount of corpus and you invest it intelligently in equities and into debt, if you keep withdrawing 4% per year for 30 years, it won't run out. And this is also according or accounting for inflation every single year. In this calculation above, for the sake of keeping it simple, I did not include any inflation, right? That means 50,000 rupees that I started withdrawing in 2023, by 2025, I want that to go up. because the prices of the goods and services around me have kept on going up. Petrol prices, oil prices, everything is increasing. So I want to eventually withdraw 60,000 rupees per month in 2025 and 70,000 next year, 80,000 next year. That's what I want to do. So this 4% rule accounts for that also. But one slight modification that you need to do here. In India, this 4% rule won't work because the inflation rate is slightly higher. So here you'll need to give, I've made the calculation here again. So here you need to give a yearly withdrawal of 3%. So based on this number here, if you make a corpus of 8.6 crore rupees, you keep on withdrawing 3% every single year, which is coming out to be 2.15 lakh rupees every single month. This money will last you more than 30 years. So that is a calculation that we have seen here. Now you understood, okay, 8.6 crores is the money that I need. Now the question is, how do I make that money? How do I start building the corpus? So a bottoms up approach is what we are doing here. So first we understood what is the monthly amount I'll need. Then we got into what is the corpus that I'll need. Now we are going to get into how can you start building that corpus for yourself? What sort of investments I should be doing to start making that corpus for myself. So here I'll open the SIP calculator of marketfeed. Let's go give the values here. So I'm going to be investing for a period of 25 years. Again, your numbers may vary. For yourself, you can come enter your numbers here. So you can see that if I'm going to make a monthly investment of 21,000 with an expected return of 12%, let's say I'm going to invest into Nifty for a period of 25 years, my total wealth will be only 4 crore rupees. A problem, right? Because we need more than 8 crore rupees to sustain our lifestyle till the day we die. That means even after 30 years after retirement, the money should keep on giving returns for us. So this 4 crore is not enough. So what are we going to do here? We're going to check out a step up SIP calculator. Here you can see the proper step up SIP calculation here. That means here we're going to invest 21,000 rupees every month, but we're going to add an additional variable. We're going to increase our monthly investment amount every single year by 5%. That is our annual step up. We're still going to expect 13% returns and we're going to invest for a period of 25 years. At least we have reached a much better place, which is we have made a corpus of 6.74 crore rupees here. And by playing around with this number, what is a corpus that I needed? 8.6 crores, right? So by playing around with this number, you can see that if I invest 27,000 rupees per month and increase it every single year by at least 5% and have a expected return of 13% in 25 years, I can have as much money as I want for the rest of my life. So this is a basic calculation here. What did we do? We did a bottoms up approach and we understood what is a monthly investment that I need to have a lifestyle that I'm wishing to have for myself. Now, you can give all the right values for yourself. I'll give you the entire links in the description down below. You can go check it out. You can enter all these values for yourself and you can figure out the exact number that you should be having in your retirement plan. Now, let's get into the last portion of the video, which is things to keep in mind before you start your SWP. The first thing is the obvious elephant in the room. The number that you're going to see on the screen is going to be very high for most of you. That is, this number is not an easy thing to digest. That means your monthly SIP itself should be 27,000 rupees if you want to withdraw 50,000 rupees equivalent in the future. So that is a big deal for a lot of you, I understand. So what can you practically do here? One, hopefully increase your monthly investment amount. Two, go for a higher annual step up or a percentage assumption with a higher annual step up. That means every year you're not going to increase your investment amount by just 5%. You're going to invest even higher every single year. That can make you reach your goals even faster or even reach a much better lifestyle than what you're living now. So here two more things before we wrap up the video. One, the taxation cost. There is going to be a 12.5% long-term capital gains every time you sell your mutual funds. Let it be rebalancing. Let it be you withdrawing money every single month in the SWP route. Any world that you live in, Nirmala Sitharaman ji and the government is going to take 12.5% of your profits as long-term capital gains. This exact calculation can only be done at the time of withdrawal, and you should be having that also in your mind when you're planning your SWP. The third thing that I want to give you before wrapping up is some motivation and again some practical realities. So in reality, all of us want to retire at the age of 40, at 45, at 50 and get financial independence. What does that mean? We want to reach a point in our life where we don't have to worry about money and we can let our money work for ourselves. But one practical reality here, one motivation for you here. In reality, even when you say you're going to retire, are you going to stop work completely? Are your incomes going to go to zero? Hopefully it will not. Hopefully by that time you'll have some passive businesses in place, have some passive income streams in place, so that even if you do not work, even if you are enjoying your retirement, you'll be having some amount coming monthly into your life. So you wouldn't need to withdraw this 2.15 lakhs. You would maybe need to withdraw only 1.5 lakhs, and that extra 65,000 that you're getting from other sources might be enough to reduce or change this entire calculation for you. So that is also one thing that you'll have to keep in mind. So with this video, hoping that all of you got a lot of motivation, a proper reality check, which makes you want to go and work towards your goals harder. This is Ajay Ajith signing off. See you all again. Bye bye.